Good day, everybody. Happy Friday to you all in what has been a bit more of let's just say an interesting week. And I wanted to give you a top 10 as we go into our weekend with a bit of food for thought and a bit of an analysis on what we saw throughout the week. So, enjoy. All right, it was only, Wednesday night that we saw this candle here. Quite the large candle there on Bitcoin. And a couple of things to note. Yes, whilst it did close up about 3% or whatever it was, we were at one stage down 3%. As I say, 3.5% we closed up. We were down 3% at one stage during the day and making this little high that was set here look rather like it might become a lower high as we were set or looking very close to breaking down through this low, therefore putting us back into a daily downtrend. Of course, at that time as well, we were looking very close to breaking the low of this weekly candle, which was last week's weekly candle, to the downside. And of course, you can see this pullback into this cradle zone, which is where I like to trade from and take my analysis from, for the most part anyway. I mean, whether it's the Bitcoin breakout, the crypto cradle, or the Fibonacci booster, I am using these averages quite frequently. So it did look as though we might be heading lower. But the CPI figures came out, of course, and that was a little bit better for the market, bringing risk assets back to the forefront, and hence our 3.5% move to the upside. But realistically, something else to be considered is that the fact that we, from the low to where we closed, it was actually a 6.74% recovery. Nothing to be sneezed at all. So it was a really, really big swing of events there on Bitcoin. And I'll just show it to you when we go to a 1 hour chart here. Have a look. That was what did the damage. That single candle of 3.82% on the 1 hour chart. We had started to climb from this spike lower for many hours into the evening. It was at 10:30 p.m. Australian Eastern Standard Time that the CPI news came out, driving the market higher. We then saw a pullback, and very nicely, we saw the market continue to rise on. Now, that's been something that's been fairly uncommon of late. When we look at this 4 hour trend on Bitcoin, have a look. It's just blocked in. We went up through it, we went back down through it, then back up, then back in and stayed around. We went above and broke out really well before collapsing straight back down underneath it, then shooting straight back up. The market on the 4 hour is a real mess and a real worry. Oh, I shouldn't say worry, but a real mess. And look at how it has been. Sure, throughout these periods, we can make money because the lower time frames do offer up opportunities across the entire market. When the market is not acting in this bouncing ball cyclical motion and it's doing more like this, shoot straight up, straight back down, up, down, up, down, up, down, up, down, it makes our trading limited. The opportunity is limited, and therefore a lot more difficult for crypto traders to actually be able to find those really nice trends to be able to profit from. So where are we now? Well, realistically, we've gone low to high, so we don't have a 4 hour uptrend. What we've got currently with 34 minutes to go is a bullish candle starting to form here. It won't be tradable for me. I'm not interested in getting long on this. But if we are to see this put a higher low and it breaks this high, this higher high, then we will have a 4 hour uptrend and we'll have a much more healthy market, and a market for which we will be able to trade and find trades, and more than likely, if we know what we're doing, do quite well out of it. The bigger picture on Bitcoin here, the higher low to higher high, this high here only just broke this one, but it did do it. Currently, we saw yesterday's candle break the high as well, but only just. And interestingly, yesterday closing down pretty much flat on the day. Don't forget, at one stage, this market was up 3 to 4 or 4%. It means it fell back significantly coming into the close, and that is what we witnessed with this clean pullback. Now, I'm not concerned about the pullback. I'm concerned about where it goes to next. Will we push on to new highs, or will we continue lower? I don't have a crystal ball. The fact of the matter is that on the weekly, Bitcoin is still in that region. It is still in that cradle zone, and whilst there is the possibility of a further push higher to get us deeper into that cradle zone, one must be quite cautious, and where we go to from now is really, really important, as we have seen messiness. A lot more selling. The buying's happened quick. The selling's been more drawn out, but we need to see a continuation of buyers. And before I go through the rest of my top 10, I just wanted to give you a word from the sponsor of this video, Coinly. Please do stick around and watch this video. As I said before, it does keep the lights on, and it's worthwhile watching. Coinly is Australia's leading crypto tax tool, catering to investors and traders at all levels. Whether it's crypto, DeFi, or NFTs,
The platform saves you valuable time by reconciling your holdings to generate an ATO-compliant tax report. Coinly offers seamless integration with over 600 wallets, exchanges and services, with most users able to generate their full suite of reports in under 20 minutes. Use my promo code TC30 to get 30% off any Coinly tax plans and download your report today.
Okay, so Ethereum is next. Now, it's had a pretty good run. All right, it's had a pretty darn good run. Definitely, if you compare Bitcoin's chart with the pullback here and the move higher and how slow that move's been, and you look at Ethereum, the pullback here, we've had a much better break of those highs. Very clear, good break of the highs. We've cleared this 1730 level very, very well. Excuse me. We've cleared that 1730 level remarkably well, and it does look much, much stronger now. That being said, if you look at the weekly, again, because we're not hitting that resistance, it does look more healthy, but we are still in this cradle zone. We have a higher low, a higher than a low, so we are not in a traditional downtrend on our weekly chart, but don't forget, you go higher again. Excuse me, I got a frog on my throat. There is a very clear lower high and lower low on the monthly. So to pull back up into this range would not be out of the ordinary if that monthly trend is to continue. It's a bigger picture type trend. So it's, I am focused more on these lowers at the moment. Now, here's the thing. If I show you the 4-hour here again on Ethereum, whilst it does not look as ugly as its bigger brother Bitcoin, it still goes from high to low, then back up again. So once again, there is no trend on that 4-hour time frame. Even if we drop to the 8, we can see a nice clean pull back here, higher high, higher low, higher high, then a thump straight back down, taking out that trend. So once again, we are now sitting back and waiting for Ethereum to really give us a trend that we can work with. And whilst it is nice to see Ethereum, at $1,900 currently, it's got to give us some trends. And that's what's been really frustrating for crypto traders the globe over, is that the daily's been the time frame that's where the best trends have been, but it's just the way that it's been doing it that we haven't really had too much opportunity on our lower time frames. On to XRP, and look, in all honesty, XRP is not really saying too much. It's just a very, very messy chart. Of course, a couple of days back, we did get a nice move there, but look, we have a higher low, a higher high, and then very choppy, messy market. This is one of the reasons why I really like the 4-hour. It just clarifies what we've got. Sideways forever, down, back up. It's not tradable in my eyes on XRP. DOT's been grinding away quite nicely. A really strong day a couple of days back of 7%. Clear higher low here, high, higher low, pushing to new highs. But again, you look at this, we're up 7%, then we're down nearly 4%. We're up 7%, then we're down nearly 4%. We need to get a little bit less crazy swings and a little bit more of the bouncing ball. And as you can see here, we did have it. Higher low, higher high, higher low, higher high. This was the opportunity phase. The pullback into here, did it do it? It pulled back, it kept pulling back, and then it shoots back up again, causing divergence on our 4-hour. Not into that at all. As we go higher to the 8-hour, this actually may offer an opportunity in the next 4 hours 30, as you can see over here. However, with that being said, we are convergent but again, I like it when we break highs properly like here. Here's our high, pull back. Here's a nice, clean, clear, higher high, then our pullback. You look at it now, it's just if we go from a deep pullback straight up like we did, with that nearly 10% candle, and then we pull back in, we've got disparity. We just don't have that really nice drive higher. A single spike candle often does that. If we do see this set a higher low and we push to a new higher high and it does it properly, that's going to be a very good thing for us traders around the world. Again, I do wait. Doge is a chart that is honestly better not talked of from a trading standpoint anyway, because it is just in a consolidation still with the higher lows building in. But look at these daily candles again. This is a very confused market that we're seeing. We're seeing a shoot up to sell off. We sell off, we shoot up. We shoot up, we sell off. This is not conducive of good, consistent outcomes with our trades. The Binance trend remains very, very strong still, and I'd love to see it pull back on the daily. Maybe 300 would be the number. It certainly wouldn't be bad if we did come back to 300. Why? Well, this trend's been cyclical very nicely for quite some time. From this high, well, look at all the highs. Here's our high, higher low. There's a high, that wasn't very good. Here's a higher low, really nice new high on the last. Pull back, really nice new high on the last. Pull back, really nice new high on the last. This is what I call cyclicity. Now, if I can see Binance pull back into the cradle zone here cleanly, the daily will certainly be very, very nice for me if it does that. With that being said, once again, we go to our higher time frames like our 12 hour, 16. There's not really much we can do. We go to the mid time frame of the 4. And again, we've been struggling. It's just holding its ground. It's quite messy up there. It's not of interest on any other time frame. With Cardano, we need to get above this region here. I've been saying 55 cents or thereabouts. We've got to clear that level. We've got to clear it, not just clear it, but really leave that level. With the higher lows building up into that level, a breakout of 55 cents, not as a breakout trade, as far as how we teach our course, but more as a breakout of that resistance region. We get above there. Now we've got something that we can truly work with because we'll have some movement that is a little bit more than what we've been getting. Again, look at this. There's not much happening here. The trend did start in the 4 and then it went straight back down. It's almost like every time a trend starts, it gets erased very, very quickly. Solana has been slow for a long time, again with lower highs, but without higher highs to boot. The consolidation's still occurring. It's a messy consolidation, but I want to see Solana above $50. That way we stretch the trend out. We get the moving averages fanning. Look at how closely they've been tied together. And this is one of the things with moving average. You'll see oil all over Twitter, which is notorious for people that have followers but don't know really what they're doing. No offense, Twitter, it's just a fact. And when people say, oh, the moving average is crossed, because they look at a chart like this and they go, crossed there, should have sold there. Look, I would have, if I was short, I would have made heaps. But what about the fact that when we get a market like this, you'll get a cross here until it goes back down, then the moving averages will follow it. You'll get a cross here up, then it goes back down, then it will uncross. So you get these times in the market where the moving averages will crisscross. It's very, very easy with hindsight to go back and say, well, every time the moving averages cross, I should buy. The fact of the matter is moving averages are following price. As price moves, the moving averages will also move with it. So that's why I want them fanning out. And I'll look for opportunities when they come back into those areas. You can see here on the 4 hour again, a messy looking chart. AVAX has been doing not too badly. Little disappointed in this little pullback here because it was looking like if we did come back in a little bit further, perhaps to this 25.95 or thereabouts, 26 bucks, we could have had a lovely daily cradle trade. Of course, that did not eventuate. We have pushed on and we have a very nice trend there. There's no doubt about that. But again, we come to our lower time frames. We see this messiness on the chart. This is not what I'm after. I want nice bouncing ball cyclicity. We had it for a little while on the 2. Look, pull back in, move away, pull back in, move away. Since then, it's been a mess. Another market that's been very difficult to trade. That's why I haven't been trading it. With Tron, very little's been going on. If you look at the daily ranges on Tron lately, it's been very, very small. It's super tightly consolidated. I mean, if I draw a level through here, have a look. We've got a test there, we've got a breakthrough, a test there, close to there. We've got the higher lows coming in. We've got convergence. It might pop through, and if it does, then I'm interested. Until then, well, we're in a consolidation. And I'm not looking at the lower time frames because of this. Look at the mess. This is not this is not a market I like to trade. And keep in mind, I'm a trend follower. It makes it, well, it's what's worked for me. Everyone has their own way of doing things, but this is what I've been doing for 17 years. And, well, professionally for, what, 14 years. Sorry, I had to really think about that. My brain just stopped working. So for me, it's all about trends because it's how I've applied my trade and it's how I've made my money. So I'm not interested in trading channels. I'm interested in trading trends, and therefore I must wait for these trends to come back. So across the board, we've seen some positivity, a little bit more green coming in even as I've been speaking with you. Don't get ahead of yourself here. What I want to see is I want to see Bitcoin push to new highs, give us a 4 hour trend, and I want to see us leave these highs behind properly. The last 2 highs, this one and this one's still yet to be decided. They've been a little bit lackluster, and the chart structure and the way we've got there, it hasn't been very pretty. I want to see more. I want to see consistency. It doesn't need to be a 10% day. As a matter of fact, that probably wouldn't be that good, but a nice grind of a bouncing ball. Something more along the lines of what Binance has been doing. Nice, strong moves, consistently doing so. So have yourself a great weekend. I hope this top 10 finds you well. and it helps you with some of your views as to what you're going to be doing. Or also it helps you if you're saying, I'm not finding too many trades. Neither am I, because there are not many out there. And one of the key factors when you are a trader is knowing when to stay out. At the moment, whilst I do have a watch list, I'm waiting for a bit more from the market. Be nice to see it continue higher. Have a great weekend. Bye for now.
The Trader Cobb Crypto Show, talking business in blockchain.